have to be in this room. So yeah, I am grateful and really appreciate to be part of this union that we are in this room, and with everyone else who has joined today. Thank you.
Absolutely, absolutely. Thank you so much. I truly, truly appreciate you, as always. I think before I really we get into the swing of things, just to welcome those that also just join in. Welcome, welcome, welcome to the property tax webinar. And I hope that you're gonna really benefit a lot from the session tonight. But before I get into introducing formally Mr. Mthetwa and just in terms of what he does, I just want to share a screen with you quickly so that I can just give an overview of who we are as well. So also just to introduce myself, I hope, okay, I think maybe, no man, this is not the one, but yeah, so just basically to also introduce myself and what we do as a company so that you guys can also have an understanding as well in terms of how maybe we can be able to be of assistance to you. Yeah, so I think I'm going to share that screen. Okay, let's get into it. All right. Cool. All right, wonderful. So quickly, I'm just going to get into it just quickly before we get into the business of the day. Let me just mute somebody there. Yeah, so I am the founder and the managing director of a company called Gavin International. So we are a fully registered real estate company, but I normally say that we are very unconventional in how we do things. So our primary objective is really to deal with property investors, whether you're starting, whether you already have a property investment portfolio and you want to scale it up, we are able to then assist in that. But what we have done is that we have combined pretty much three pillars in the business. The one is real estate, the one is financial planning, and then the other one is mental health awareness. So I know a lot of times people ask me, but why the mental health awareness aspect of things? But really that has to do with, I mean, I've been doing this for about 6 years now. And I realized that there's so many things that we really need to deal with from a psychological perspective. And that really has brought in that element of us bringing in skilled psychologists that definitely assist us in that front, whether is one struggling to invest because of maybe past traumas or whatever the case might be. But, we really then help from that perspective. So we do have an amazing business partner that we're going to, as the next coming weeks, we will be introducing all of them, and all of them will basically be providing, okay, let me just check okay, cool. Yeah, they will be able to, we'll be doing these webinars. We'll be touching on some of these topics that we find to be, a challenge when it comes to our clients. And then we're just going to have an amazing and great time like we currently have with Mr. Mthetwa. So Mr. Mthetwa then falls into the accounting services side of things. So he then helps us to really, when now there's an investor, you want to be helped with your finances, with your tax and your bookkeeping, everything from that front, he then will be able to assist with regards to that. We also have bond originators, and then you'll see again in the next couple of weeks, we're going to have Lerima, who is our business partner on that side. We're going to also have a chat from that perspective. We also do maintenance, we do sales, we do rentals, and then we do financial planning as well. So there will be a guy, Polisi, who will be coming through from that side, helping with regards to the issue of financial planning. We have conveyancers as well in the house. I see that Mr. Kanyile is here. He also is now our business partner when it comes to the conveyancing side of things. And of course, then we also do financial coaching. So that speaks to the overall wellness in terms of your finances. Because again, it's one thing to advise from a property side of things, But if we don't know what's going on in your finances, that can be a bit of a challenge. And we've seen that with COVID, that people will end up dumping or selling their properties, even if they're performing good. But you find that, you know, from a structural aspect of things in terms of your personal cash flow, that is a big issue. So that's why we look at it holistically, so that at the end of the day, when we need to scale, we scale from a point of understanding. When we have to start investing, we also start from a point of understanding as well. So all of this basically just, I normally say that we are cooking financial clinics, and that is the big goal that we have, to make sure that at the end of the day, when you come in, you are healed financially. And that's what we are all about. Yeah, so I just wanted to give an overview of then the business. And as I said, in the next coming weeks, we'll be doing more of these webinars. So it's all about empowerment at the end of the day. So now I'm gonna kickstart then, Mr. Mthetwa. You know, I don't know if you remember that show Yaga DJ Zinhle. Zazisa yourself. Can you please zazisa yourself to everybody, and just obviously give us an overview of exactly what you do.
Okay, thank you, Mr. Mkhabela. My name was Lusito Mthetwa Isibongo, unyambo suthingswayo, and thank you. And I have spent the past 15 years of my life doing accounting and tax and business management consulting services. 9 of those years has been where I established my own company called Dispersive Consulting, which I am still the CEO, running the day-to-day operations of that company. And generally what I am passionate about is mainly helping and educating business owners into having control in their business finances, because in the first 6 years of being an employee of various accounting firms, I learned that we used to just produce financial statements and hand them over, but business owners never really grasped the importance or the need of why they must have that. And then that's where I established the company with the assumption that every business owner should know that they need financial statements. And to my surprise, that has been, I think, for the past 9 years, a mission to educate every single business owner. And basically, like what Mr. Mkhabela said, is that one of the biggest challenges that you have as an accountant is to try and convince the mechanic who has a shop to right next to where in the township, to have a bookkeeper and accountant. That would be one of your biggest challenges, and educating him or her as to why they need that. So what we do with Gavin International is to make sure that we help the business owners, the property investors, to keep their books, to have proper bookkeeping processes implemented in their company, maintained in their company. And not only do we just leave it there, we actually help you understand what's happening in your company, what you need to do in your company, and just to help you make those wise decisions using numbers, and to help you communicate with stakeholders, basically every stakeholder that you will need to engage in when it comes to your business. You will need the numbers. Everyone talks numbers out there. So we help you comply. We help you make sure that you're ready to trade and have all of those requirements. Yeah. So in summary, that is what I have been doing for the past 15 years. Yeah.
Wonderful. Now, thank you so much for that intro. I want to start here. I know a lot of people ask me that question, and now as I need to know, why do we pay tax? What's the reason why we must suffer like this if we have to suffer paying tax? If maybe we can start there, civil law. Why tax?
So tax, it's the government or a country's system of collecting income in order to be able to fund activities, to be able to build, activities such as building roads, such as building hospitals, schools as well, to make sure that the people, because unfortunately in our countries, we have people who are not making an income. We have people who need support. So that is one of the reasons why a government or a country or the whole world decided to create the systems where they will collect a portion of whatever anyone who makes an income makes, so that they can be able to fund these facilities. We drive on beautiful highways here in South Africa, and it is because of tax. You are able to go to a government hospital and you find facilities and you get health care. It is because of tax. We've got free education at a certain level of the education system, where people who cannot afford those services, the government basically then says that we're going to be able to then support you. Even if you are working and making an income, there's a certain element or something that you use in this country that you're not paying for those services directly, but the government is. So that is the one reason why tax is collected. Yeah.
Right. Wonderful. Yeah, no, we hear it. It's just it becomes a bit painful when that money comes out. Now, obviously, when it comes to property, the whole objective around investing in property is that one needs to get an income. You're buying and then you rent out the property. And I get that at times we normally have a bit of a misunderstanding over when it comes to the declaration aspect, to say when do we start declaring when it comes to our income towards SARS. And then at times you'll find that we don't declare, because maybe the idea is that if I declare, then first of all my income will be less, and that now exposes me to a lot of things where now maybe SARS can then start to scrutinize me. But now, from your understanding as a professional dealing with SARS, as now I'm a property investor, when should I actually start declaring, my rental income towards SARS?
Mm. You don't, the decision isn't, as much as we think that we are making the decision.
This,
Okay,
yeah.
thank you. As much as we would like to think that we are deciding when and when not to declare income to SARS, the decision doesn't necessarily lie with us, because the money is in our account. We may decide to, we may declare it on a tax return or not, but the law requires each individual to declare their income the minute they receive it on their hands. So there is a time frame, obviously, that works in the system where we declare our income tax returns. It usually runs from the 1st of July up until the 23rd of October. It depends on the calendar year, on that particular year. But the law requires each and every person to declare every single income or trade income that they are making at the time of that financial year that we are working on. So financial year, there is our normal year where it's the 1st of January, New Year's Eve, 1st of January, we celebrate a new year. But a financial year, according to SARS, runs from the 1st of March up until the last day of February the following year. So any income that you've received, it doesn't matter whether it was small or large, during that financial year, it has to be declared to the authorities, to the revenue, through your return. However, maybe you will stop me if that was your next question. We need to be mindful that no, we're not only declaring the income, which is what most people fear, to answer your question, where you said that it might reduce my money, I might have to pay, and then saying Salah without, I don't have money anymore. We must always remember that declaring income also means declaring expenses that are related to you when you are earning that income. So the fear comes from the mentality or the thought that we are only going to be showing SARS what we earned, but we also take into consideration what expenses we had while we were earning what we earn, especially when you're speaking in terms of, in the context of a property owner. You own a property, you receive rental income, but you pay rates and taxes. You pay for water and lights. You pay, for example, if you've purchased that property using a bond, you pay interest on that bond. You pay, maintenance, whatever maintenance is happening on that product. Your tenants break something in your property, you buy or you call people to repair. All of those expenses, they have to be taken into consideration, and therefore they reduce the tax that is payable to SARS on your income. And sometimes you might not pay any tax. You might actually be of benefit than loss. Yeah.
Right. And then I think while we're still on that subject, now obviously at times you will hear someone says now, I'm being audited, by SARS. And when does that now happen? Is it like a random thing, or it just happened to specific people?
So I won't speak in terms of such systems, how they choose to audit someone.
Yeah.
I won't speak in those terms, but I will just provide an understanding of what it means when you are being audited. In my understanding, that is all system generated. It's set up to flag certain income, especially when you're making a profit on your rental. There are high chances that you're going to be audited because you're making a profit, and then SARS says, well, before we give you money, sorry, if you're going to be making a refund, my apologies, before we give you a refund, we would like to see that the expenses that you're claiming that resulted in a refund are for real. So that's basically what constitutes an audit. And also, sometimes inconsistencies in income can also trigger audit. So, but I don't want to speak on the triggers of audit. So, just we want to avoid audits.
Yeah.
Um,
Yeah.
so what happens during an audit is basically that SART wants to verify the information that you've submitted, if indeed it's for real. And verification, again, if you heard my introduction, was that it's all numbers, but numbers need to be backed up by evidence. So if you're going to be claiming expenses and you're saying that I was charged interest of 100,000 during the year, SARS will want to see your bond statement so that they can verify that interest if it adds up to 100,000. If you say that I fixed toilets and they was charged 20,000, they want to see an invoice of the people that repaired your toilets, and therefore that is basically what an audit means. Yeah, I think it's usually a harsher word that's used when we hear audit. We're being audited. It sounds much stronger than what it actually is, because it's just merely a verification of the information that you submitted. So rather try and submit truthful information on the onset, because once you're selected for audit, you will be given an opportunity. They do say, if you've made a mistake, please go and fix it, in case you lied. But if you do not fix it, then rather just try and declare truthfully from the onset, so you avoid any problems. Yeah.
Okay, awesome. And maybe just to remind everybody that if you have any questions, please drop it on our chat box there, so that we can be able to answer that. And then again, just to zoom into that again, with regards to this declaration aspect, what are the ramifications, or just the consequences when it comes to one not declaring, because I'm thinking now that, there is a lot of people out there that, they're generating a lot of income from properties, but, it has just become one of those things that, not declaring and I've been doing this maybe for 5 years, and that is, nothing has happened to me. But are there consequences now, that now comes from SARS when it comes to non-disclosure, so to speak, with regards now to these incomes that one will be getting from their properties?
Yes, there certainly are consequences of not declaring or not truthfully declaring your income. You can be fined quite high percentages. Sometimes it rises up to 200% of whatever you didn't declare with the receiver. So it is to our benefit to declare than not to declare. And you may think that you are getting away with it. You can get away with it for 10 years, sometimes 15, even 20, but it does catch up with you. You may even pass away having not declared. But the minute you actually pass away, it will all be connected. It will rest with your children at the end of the day. So we are now living in a technologically advanced society. So all of these institutions are connected, especially banks. Banks are highly connected with SARS. We see situations where you've ignored a debt that you have with SARS for a lengthy period of time, where SARS can go into your bank account and take whatever is owed to it. So, they are linked to Home Affairs. They are linked to all these deeds registration systems, especially property owners. We always advise that if you're a property owner, do not play with the risk of not declaring your income, because your property, your name is registered on that property. That property is registered. When you go and request wind deeds, they can just type in your ID. It'll show all the properties that you own, and it's really not hiding. It's just if you are doing that now, you probably, your name hasn't come up on the list. There's that song that says you're waiting for your name to be called. It eventually will be called. Yeah. So it's got high consequences. Yeah.
So you mean like these guys can go into my bank account and then take a inquash, like take whatever they want without my
Yes.
consent at all?
Yeah, yes, it's called garnishing. There are various steps that happen before that. You will receive a letter from SARS saying that, Mr. Mkhabela, you have a debt of this much for this particular tax type, let's say VAT, for example, or income tax, for example. Even if you haven't declared or submitted a return, you do get letters which says that you are being penalized for non-submission based on an estimate. We estimate that you would be making this much income this year, and you are being penalized for non-submitting of your tax return. So that happens, then you are able to then communicate, start that conversation with such and say, like, whoa, I was not working this year, I did not receive an income. There are certain ways of doing that that we help people with who have received that information. So garnishing does happen. You either be garnished at your workplace, where your HR will receive a letter from the receiver stating that, oh, Mr. Mkhabela owes this much, we're going to be taking 500. And a third party has no right to refuse to pay over the debt. Legally, they have no right to do that. The banks cannot refuse to to release those funds to the receiver. Yeah. So declaring is basically it's counter-attacking. I'm not a huge watcher of soccer, but I
Yeah.
think if I can use soccer as an example, it's basically, stopping, defending before, the striker comes and strikes your finances, your funds. It's basically communicating, because tax returns are basically a communication between you and SARS. SARS is sitting there, we are sitting here with the banks, who are receiving the money, sometimes cash, and all that. And they only see one side. So when you declare, you show them holistically what's happening with your life or with your business. Otherwise, they'll just assume, and then they'll hit you with penalties, or take money that's not really what's supposed to be taken. Yeah. And that's when we say then it's they are bad or anything. It's because we haven't played that part as well. Yeah.
Okay, wonderful. And so we have a question from Zani says, what if I've paid an informal gardener without any invoices? How do I include that when filing? Obviously from a rental perspective, can I do?
When filing for returns.
Yeah.
Yes, yes. So in going forward, I would encourage you to purchase a receipt book for them that you'll keep in your house. Whenever pay them cash, just make them sign that receipt book, write it on that receipt book. Those normal receipt books that we find on any shop, really, retail shop, in future going forward. Because you are going to need to provide evidence for that. However, if you haven't done that and you need to declare, I would encourage you to include it. In what we do is we do a spreadsheet of all the expenses for gardeners, for housekeeper. We put it on a spreadsheet, and then it's highly possible that it depends on really what the system requires, but it's highly possible that SART will ask for proof for that, because anyone can come and claim that they've paid a gardener or a housekeeper, and if you don't have proof, that expense is going to be denied. 80% of the time, that expense is not going to be accepted because you do not have proof. Yeah. So I would encourage you that going forward, do buy that receipt book so that you can be able to provide for that. Yeah, that's if you can't pay them via e-wallet, or you can't pay them if you're withdrawing, then you might use that as your as proof, because SARS does ask for bank statements where you insist and say, but I withdrew 2,000 on this date, I was paying the gardener, and it's proven, it's there on the spreadsheet on my submission. Then they will require bank statements, and they may consider your claim. They may consider it. Yeah.
Yeah, and I think obviously, yeah, and I think also it's very important that we might take it lightly, but all those expenses, if now you have to then subtract it from that income, can mean a lot. It might seem insignificant to do that, but definitely when it comes now to just balancing, so to speak, from a numbers point of view, that becomes really, really, really important. So yeah. So I hope that we have answered your question, Rizani. And also maybe then while we're there, from a scrutiny perspective, Mr. Mthetwa, in terms of, as an individual, because obviously there are those investors that, purchase in their personal capacity, and there are those that will probably purchase in a company, for example. In terms of then from a SARS point of view, does SARS look at us the same, or will it differ, from a compliance point of view?
Please repeat that for me, Mr. Mkhabela. I think there was a network breakdown there.
Okay. Yeah, so I was talking about the issue of, the way we purchase these properties. So if now I purchase these properties in my name compared to maybe Rizani who's buying in a company, is from a compliance point of view, does SARS look at us the same, or will it be different, even how we text from that perspective?
So in terms of because the question is two-way. Yeah, in terms of looking at you the same. So maybe let me answer that first. Both individual person and a company, when it comes to property investment, the process or the system is the same. There is income, less expenses, then you get taxed on whatever profit. So I'm just going to separate any other income that you may be receiving as a person, because that has its own tax system as well. You know, like a salary. A salary is taxed different from a property income earner. So when you get a salary, you get taxed pay as you earn. So immediately you are paid 48,000 a month, you get taxed that 48,000. SARS doesn't look at, or rather the tax system doesn't consider any expenses. Well, there are some like, you know, retirement annuities and all of that as a deduction, and medical aid and all that, but it's not as much as when you're a property owner. So I'm going to put that aside because it's another topic for another day. However, when you are a property an investment property owner as a person, you will be taxed after the expenses that are related to that property. The same when you have purchased that property as a company, you will be taxed that company after taking into consideration expenses. You'll be taxed that income after taking into consideration expenses. However, the tax rates differ between an individual and a company. It's much lower for a company, currently running at 27%. And then for an individual, you can get taxed up to 45% or so. It then differs in those two ways. Yeah.
Okay. So technically, it doesn't mean just because I get rental income and then SARS then claps me with a tax bill. So it has to now do with, you know, obviously from a reconciliation perspective, to say these are this is the income, these are my expenses, and then whatever that from a profit point of view, then that's what it takes. Because I think a lot of times people, and maybe that has to do with a lot of people not declaring, because there is then the understanding that, you know, just because I get income from these properties, then I automatically get taxed. So yeah, so I think maybe that has been clarified, that it's not because you get income get taxed. There must be some reconciliation that comes with that. All right. And then there is then another question from Mkhabela, says, if the property is on your name, but you collect rental under a company, how will the tax implication work?
Okay, so the tax law, yeah, this one becomes a problem, and it will depend also in have you what's the word? Have you leased the property to the company? Leased is not the word that I'm looking for. Mr. Mkhabela, can you help me out there? When you when you take insurance, life insurance, and then you attach it to your property, there's a word there. Yes, have you ceded the property, to the company, or you collecting you're just using the company's bank account for collecting the income? So it also, that depends on why you're doing that. However, if the property is in your name, it is required that you declare the income and expenses of the property in your personal capacity, because who owns the property? That's what it's looked at, you see. And what kind of agreement between you, the owner of the property, and the company do you have? So, I mean, you would have to provide me with more information on those cases, because we do have clients who have their properties in their name, however, have ceded the property to the company, and then the approach becomes different when you've done that.
Yeah, because I think normally with this, it comes from the basis that
change my route.
One wants to there is this notion that you want that company to generate income. so that at the end of the day, the company then has a credit line, which at the end of the day, then you can use to get a bond, for example. So normally that, I think it comes in from that perspective, if I'm not mistaken. Yeah, it says that I'm just using the company's bank account to collect income. The property is on my name, no agreement between the owner. Yeah. Yeah, as I said, I think normally how I've picked it up in the past couple of years is always then when somebody says, Gavin, I have this PTY, but then I want to generate income from, that comes into the PTY, so that I start building up my credit line within that PTY. And then maybe later on, I can then use, basically this company to get a bond, for example. But I normally obviously advise that there's a lot of technicalities around it, especially when it comes to the bank. But I think while we're there, Mr. Mthetwa, in terms of
Mm,
from a banking side of things, right? When it comes to I'm gonna I'll touch on it later on again before we close. But when it comes to people that are self-employed and people that either maybe are freelancers, they are consultants, they're running their own consulting kind of work. From a banking side of things, first of all, can one get a bond, when you are self-employed freelancer and you are a consultant? And what normally does the bank look at for them to then be happy, from that basis to say, we will actually grant you a bond? Because I normally see that to get a car, it's very easy, man. Like get a car, like baba, you get it tomorrow. But when it comes to property, like nothing, they don't want us to buy property. So maybe if you just give us some guidelines around it, from a
mm,
self-employment kind of person, freelancer, and maybe somebody who is a consultant.
mm. Yeah, look, it's all because of the value. The asset that's being purchased. A vehicle depreciates, property appreciates. So when the bank, or before the bank, gives you that particular asset, they are standing a chance, or rather the risk is higher for them than it is for you. So one of the things that the bank needs to see, are you going to be able to pay for this property? You know, it's a simple principle. If I give you money, are you going to be able to pay me back? And I need to prove, or you need to prove to me that you are going to be able to pay back that money. And like I've said before, that the bank only communicates in one language. They look at the numbers. So one of the requirements, one of the few, I mean, the many requirements that they need is you to be able to prove that even when you're self-employed or you're purchasing the company, you need to be able to prove your income and expenses, and you need to be able to show them through financial statements. What are you left with at the end of the month? And then you need to also be able to show them through the balance sheet, how many people do you currently owe? Do you owe more people than what you own? That's what a balance sheet basically shows. It shows us how much do we own versus how much do we owe. And they want to give a bond or a loan to a person who owes less people and owns more things or more assets, so that they know that should anything happen, that person will be able to settle or pay back this particular bond or property that we are buying for them. So that is what they look at in just to mention a few of those things. But everything else that they require, they ask for pay slips, bank statements. It is all to prove your ability to pay back for that bond. Yeah. So it works the same way for a self-employed person. Documents request may differ. One, as an individual, you ask for pay slips, but you also ask for a profit and loss statement. Sometimes they call it, profit and loss statement, or an income statement. or at times they call it a personal balance sheet. Yes, personal balance sheet and income statement. So that is all in effort for you to prove that you're going to be able to pay back that particular loan. Yeah.
Okay. And then in terms of then when it comes to the financial, like financials and all those kind of things, is because I think it also becomes tricky, Yana, to now have an understanding on, firstly, when do I need to submit these things? How long must I now be running a business? Should I wait 2 years, or as soon as I'm making money? Because I can start a business and then in a year, I'm making up my 100,000 a month. And is there, like, does the bank look at a duration of, how long has the business been functioning, making this money for them to be satisfied to grant you, at the end of the day, that mortgage bond?
Yeah. So I just want to give, because I think I'm seeing the chat today on Mthetwa. I will respond to you on how you can fix this issue of I see that the property and yourself, you do not have an agreement. So we can discuss how we can fix that for you so that it's at your advantage. Because right now, without an agreement, the property still belongs to you. So it can be fixed though. There's a way for doing that. So just to come back to your question, Mr. Mkhabela, the requirements for a company is that the company, you must be able to prove through financial statements for 2 years, and also be able to have management reports. So management reports are basically the financial statements for that period. Let's say now you're going to apply for a bond in July, and then your financial year starts in March. So you must be able to provide your income statement and balance sheet for the time. And then what you also need to do is you need to treat yourself as working in the company. If you are earning an income in your own company, you need to treat yourself as an employee. You need to issue a pay slip to yourself. You need to pay yourself a consistent salary that you're going to be able to prove, and that salary is declarable at SARS. So you will see that the bank will usually ask for an IT-34. That is coming from you paying yourself a salary. So you first have to start paying yourself a salary for at least a period of 6 months. Where then 6 months to a year, because the income tax returns are submitted every year. So those are the things that SARS is, the banks need to prove that you are earning an income, especially if you're self-employed under a company. You are earning an income. You prove that through a pay slip. You prove that through an IT-34, and your business is existing, is operational. You can prove that with financial statements that are for 2 years and more. Yeah, that is as far as I know in terms of the requirements of the bank, unless something has changed recently. So the business, it's very important that you are able to prove that longevity of a business. I've never seen, well, I don't work with bank applications on a regular basis, but I've never seen a business that has applied within a year and bond, but it's possible. I don't know. I don't work in a bank. Depending on the income that you make, because we've got companies that start trading, within 12 months they've made 20 million. And in a conversation that I would have with a banker, I would generally say, but you see this company is is successful, therefore then that depends on the conversation that you have with your banker. Yeah, I
Yeah.
think it should be working like that. Yeah.
Okay, cool. And in terms of now freelancers, because I think that is also one of um a blurry kind of place, especially now looking at the way things are moving from an employment perspective. And now obviously you'll get more professionals going the route of being a consultant. Do they also now need to then run that as a business? And in terms of now let's say now I'm working, I'm freelancing or I'm consulting for this company. Can I issue an invoice or do they give me a salary slip? Which one then works much better in that regard?
Mm. When you're a freelancer, freelancer is a nicer word for a sole proprietor. That's what you are in terms of business management, basic business management that we did in high school. There's a company which is a private company, a Pty Limited. There's a public company, and then there is a sole proprietor as well. So that's what you are. You must always consider yourself as a type of business, not just a person, you see. That's the first mindset that you must have. And therefore, you will then treat everything else that happens with your finances in guidance of that mindset that I'm a sole proprietor, I'm a type of business. Therefore, I need to treat myself as a business. When I'm rendering services, I need to issue out an invoice. With obviously depending on the agreement you have with your client, I need to issue out an invoice. But as soon as you start getting a salary slip, you are then an employee with contractual basis, because we have freelancers like in the film and television production company who issue who issue invoices, and then we are able to provide pay slips for them. But they are freelancers. You must and then start keeping record of your expenses as well. You buy a computer, you buy something that helps you in the production of your income. You then need to keep receipts for that. You travel in the production of your income within the limitations of the travel and reimbursement claims that are provided by SARS. You are able to then claim back those expenses. So freelancers do qualify for bonds, are able to apply for bonds in condition that they are able to prove that income as a sole proprietor through financial statements or that document provided by the bank, which is also a financial statement, just a shorter version. Yeah. So you need to treat yourself like that. Yeah.
Yeah,
Yeah.
right. And I think obviously maybe just for the benefit of, to also look at it from a perspective that one could be full-time employed, but maybe you travel a lot, and maybe let's say you get a commission, and things like that. Does that now also then still form within the bracket of one having to keep these records? Can I get refund for that? How does that benefit me for me to basically formalize it? Because sometimes you just feel like, yes, I travel, but is there any benefit to that from a tax point of view? I don't know. How would you then put that to somebody that maybe is in that position?
Yeah, look, it's always being able to claim back expenses for work that you do. It's always of benefit for you, and getting into a habit. And I know it's very difficult. It's even difficult for me, um, to keep logging my travel every single day. But it's a practice that you get used to. If you force yourself, because you have to force yourself in the habit until you get used to it. And also take advantage of these gadgets, the systems. We've got a camera on your phone where if you're now getting a slip where you are purchasing something, just take a picture, and then slip is ngalahleka, it doesn't matter, but you've taken a picture, you've saved it somewhere. So you need to take advantage of these. And also we've got some people are using petrol cards, some people use you use GPS to get to places. You can take advantage of the records, from your GPS. It can tell you where you went to yesterday. At the end of the day, you're able to put in those kilometers and all that. So it's forever at your advantage to keep and maintain record of your expenses that are related to you generating your income. So always important. It has to be in relation to your generation of the income, and are also then rules around that as well. But you get into that when you are actually starting to do the return. First thing is keep as much record as possible. Yeah.
Okay, cool. So I think before I get into another question, maybe just to take a question from Sarah, who says, what is the best tax benefit structure to use for property investment portfolio between the company and the trust?
Okay. Do you want to take that?
Yeah, no, I'll take. Okay.
I think
So
you
I
have a
think it's
nice
very,
answer for that. Yeah.
yeah. Okay. I think that is very, very important to understand. So obviously, Mr. Mthetwa spoke about the tax rate that sits in a company, which is 20. Is the 28% kicked in already, or we still on 27?
27.
Yes, okay.
27.
So
Yeah.
so 27%, that's what you get from a private company. And then the trust then is 45%. So you can see then the difference there, which then becomes a problem. So again, when it comes to generating income, so remember that with trust, you get clapped from the first rand of profit that you make, which means then you're already paying that 45% tax. Whereas in a company, then it's 27%. But also there is a lot of write-offs. I think Mr. Mthetwa mentioned, there are certain things that you can write off as now you do the reconciliation. And then obviously one of the structures that we also maybe advise on that can then benefit, but of course that, it's a story for another day. But when it comes to the protection, then the trust can then hold that. So meaning that you have a company and the trust, the trust owns the company 100%. So then you get the benefit of the protection, but you also get the benefit of the tax efficiency that sits in a company. So those are the things that you can look at. But yeah, from especially the income side of it, we don't necessarily like to run just with the trust, and that is why we combine the two at the end of the day. So I hope that Sarah, we have covered you there on yeah. And then I think maybe then to as we're nearing the close, Mr. Mthetwa, when is the right time to get an accountant?
As soon as you start earning 1 rand. As soon as you start getting too busy to keep records for yourself, it's the right time to get an accountant, to get help, basically. When you're starting off, when the income and the expenses are low, and you've got the appetite, the time and the enjoyment of doing that, you can do that yourself. But there will come a time where you are interested in growing your business. That is when you need to start getting professional help, and so that you can get the benefit of professional advice. So that is when I can say it's the right time to get an accountant. And if you have no love for keeping records, for checking books, checking bank statements and all that, if you know yourself to not enjoy that, and you just want to focus on making the money and talking to your customers, getting an accountant on the onset. Bookkeepers and accountant at this stage are very affordable. There's a misconception that they are very expensive, but even if they are, the value that they bring into your business, into your life, is fairly large when you look at it. It's more than what money can actually buy. So as soon as it starts getting, uncontrollable for you, as soon as you miss a return, you really need, as soon as you don't know what's happening or what's going to happen in your business, you really need to get an accountant.
Yeah. And would you say that it might be too late at some point? Let's say, I mean, I've been running this thing for 5 years, informal, and angazi kuyenzakalani, but there is money coming in. Can I now come to you and say, hey, Mr. Mthetwa, I've been running this thing informally, and right now I need to start investing, I need to start buying property, and I can see that I can really get a bond, but now can I come to you in that manner? And normally, what will be the steps that you guys take to just make sure that I start now getting in line, if there's a right way to really put it?
Yeah, yeah. Look, it's never too late to start. No matter how many years you've been running your business informally, you can always start taking control of your finances through approaching an accountant. So it's never too late. So where we usually start is, do you have statements? Where have you been receiving the money? Have you been receiving it through the bank account? That's usually the very first step or starting point, where you can give us 5 years worth of bank statements, or even 10 sometimes. There's people that we've started, we did 6 years of financials where they've never had a set of financial statements. And the beauty, invoices, it's rare that you will find someone who's kept invoices for that long, even though the law does say you must keep your invoices for 5 years or more, but it's hardly the case. So bank statements are a starting point, even though sometimes you may have received money in cash and have paid people in cash and there's no record of that. That's fine. Whatever has happened through the bank account can be a starting point to then move you forward, to start following a system which will then implement for you to say, this is what you must do going forward. And then also SARS is also a starting point, because every person who is registered for tax must have a tax profile. So we will ask for a profile. If you do not have a profile, we'll create one for you, an e-filing profile, and sometimes even go to SARS physically to sort out the tax matters. So that is the starting point, because what happens is that when we get a person's profile who's never complied before, when you go into their profile, or you go into SARS, or you call them physically, will give you a list of how many returns this person has not submitted. So it can go back very long. We're able to see them. Then the two then need to then correlate to say, we are now updating your financial reports from this time, from the time you started. And you find people say, I don't have bank statements from the day I started, or I started 10 years ago, but for 3 years I wasn't really doing much. Then you started, where activity started as well. And the bank does provide that at a fee. Unfortunately, they will charge you for all those years. But you usually banks now email bank statements. So you just go to your email history, you download all those bank statements. And then we start there, we prepare the financial statements. We see what returns are outstanding. Then the filing starts happening. But all of that is done with you in the process. A set of financial statement can never be declared to such without you signing it off, without you understanding. And also make sure that whatever accountant that you employ, they must always come back to you and clarify and verify the transactions that were being processed, because I might be processing something and I call it entertainment, and maybe it was staff welfare. So that relationship between the business owner, you as a business owner, or us as business owners, and our accountants, it's very, very important. Don't just take documents and throw them at your accountant and then expect magic to happen. It'll be a disaster, worse off than where you were, because now there is numbers involved. Always have a relationship with your accountant. If your accountant calls you and you've missed their call them back. If your accountant sends you an email asking for a meeting, trust you me, it is very, very important. And if your accountant does not do that, then again, you need to find another accountant, or start having a conversation with that accountant, because at least once a month, you need to sit with your accountant as a business owner, and you go through your financial reports, your income statements, your balance sheet, you see what's happening, so that you can be able to see what will happen or might happen in the future, and you can be able to defend it in time. Yeah.
Absolutely, absolutely. You guys, Nizizwele, you have heard for yourself. So it's immediate. You can't do it yourself. You need to be able to contact Mr. Mthetwa there to be able to assist you. So on that note, we have come to the end of our session. I hope that there are those nuggets that you have picked up that you can definitely be able to apply, and that can make your life much, much, much better. Of course, we can talk about all of these for the numbers for a long time. But then I think in terms of if you need that to get an understanding. And remember as well, in terms of, because there's somebody asking about your fee, that obviously the things might differ a little bit. So what I would then encourage you is that you get hold of Mr. Mthetwa, and then it will be much easier then to deliberate on that perspective. But then I think then, if maybe you can give us your contact details, how do people get hold of you so that they can then make sure that they make contact.
Okay. I'm just typing it now, so that may be able to contact me.
All right. Yeah. So while he's busy typing there, I also just want to encourage you as well. So if you are sitting there and you need to have a broader chat around your portfolio, you want to start, maybe you've started, you want to see if you're doing good, or maybe there's a couple of things that you might be missing out on, you need us to look at it holistically, please also just reach out to us. Our website is www.gavshaw.co.za. So www.gavshaw.co.za, or you can give us a call on 074 412 7614, 074 412 7614, or you can send us an email on info@gavshaw.co.za. So then we can be able to just make sure that we set up a free consultation with you, and then we can have a broader chat around that space. And just to also mention that, so super excited that we are adding to our family. So if you are in Rustenburg, Klerksdorp, there's somebody that will be taking care of you. So if you want to sell a property, you want to buy that site, there's a rental that you want us to help you from that perspective, there will be somebody that can help you. So still reach out to us. And then we also have somebody that will also be managing the big parts of Gauteng, Midrand, that side as well. So please reach out to us. We are here to assist you the best way we can. But yeah, any last word, Mr. Mthetwa, that you want to leave us with, some nuggets as we proceed, as we conclude? Sorry.
Yeah, look, I believe we are all learning a way of life, especially when you get into business. You learn a new way of life, and sometimes it can take 2 years, sometimes 5, sometimes 10. But I believe that the first 10 years of business it's a time where we all learn how to get comfortable with the difficult things of business, such as, keeping financial statements, complying with SARS and other state institutions, just basically digging that down into our minds. I, for one, also am not perfect. I'm still learning that and still fall short of some of these requirements. But I realized in while I was preparing for this webinar that the first 10 years is actually, it's like a baby. You are becoming a baby, learning something new. I was listening to Lyra talking about what had happened to her and how she had to relearn how to talk like a baby does, learning how to talk. And I linked it to this, what we are trying to do here as a people, to say that give yourself time, be kind to yourself, but also be hard on yourself when you need to, so that in the 20th year of business, we can now be doing these things that need to be done automatically. You can wake up tomorrow and be able to give the bank your income, your profit, and all that. And it's a step by step, and try it every day. You may fall short, but get up and try again. Yeah. And do feel free to call me. I love people. Yeah, so I'm looking forward to talking to some of you. Yeah, thank you.
Absolutely. There's, as you can see, the numbers of Nthabiseng, our newest member to Gavshaw International. So you can take her details there. She will be able to assist you if you're around Flagstock, Rustenburg. Yeah, she will be helping you from that side. But I just want to say to everybody, thank you so much for availing yourself. You could be doing so many things, but you are here with us tonight, and I don't take that for granted, not at all. And I'm truly thankful for you for joining, and to you, Babu Mthetwa, I truly appreciate your support, and as we navigate helping our communities, helping our people, so that at the end of the day we can be able to build wealth, create lasting legacy, that can then live. That it must outlive us, basically, and that's the whole objective around all of these things that we do. So I truly appreciate you. May you have an amazing and incredible evening. And as I say, those are the details. If you wanna get hold of us, please do. And then let's see how we can be able to assist you. And may you have an amazing and incredible evening.
Thank you, everyone. Thank you, Babu Mkhabela. Appreciate.